Welcome back to Good Revenue. We are here today with Joyce Cacho. She has had an incredible trailblazing career across banking and manufacturing, and she's a global expert in supply chain, financials, and effective risk management. Welcome, Joyce. We are thrilled to have you.
Thank you so much, Neeta. I was thrilled to get the invite.
You get really excited about complexity, which is something that I love about you. And you're known for driving growth in companies. How did you actually become a person to call when someone needs to grow during complicated times?
I think I became that person because my curiosity led me to have authentic experiences domestically and internationally, where I had to learn languages to be successful. Folks were looking at my profile said, she seems to thrive when it's not the commonplace that she's dealing with. And we have a board in the case of Rabobank International and being tapped to expand their global research network. It was, we have an initiative that needs somebody who thrives in complexity. And that seems to be a pattern. People find themselves in situations not created by themselves, and they look for somebody who feels comfortable and thrives in those situations. That's how I've managed to go from one thing to the other.
It's such a great quality, and it's something that we don't talk about enough because I think sometimes when people are navigating challenging moments, it's almost like they're looking for the calm on the high seas instead of just assuming that the storm's going to keep coming, right? I like that you embrace that complexity. And I know that one of the ways that you do it is that you are very active in finding indicators that help businesses be more successful. And you have really looked at that as a repeatable skill set. Can you tell us a little bit more about that?
I'll go to the core of it, question the assumptions.
Mm.
For any model to resolve, business model, computer model, lifestyle model, to deliver and be in those calm waters, it takes a set of assumptions. A key indicator of a business about to be in growth form is a business that has questioned one, two, three assumptions of whatever the industry it is. And so it really takes being able to identify when assumptions are being questioned. I tend to be a consumer of acquisitions and who was acquired. Then I go down the rabbit hole. I'm a bit of a data consumption geek, and I go down the rabbit hole and see the valuation and look at the peers. For me, the especially in complex times, look who has lent into it by changing their assumption of what the future is going to look like.
In your experience, do you see repeatable patterns in those indicators? Are there trends across stages of companies or industries?
I wish I could say yes, but in fact, what I see as repeatable are the characteristics of the persons that question the assumptions. And that goes across size. When I look at the head of corporate and corporate banking when I was at Rabobank, he went on to be the vice chair of the board. When I look at all the other organizations where I've been fortunate to work, these humans we're like-minded. They lean in looking at adjacent industries as opportunities to grow, getting a different crowd to contribute to decision making. They look at where has value not been recognized before?
Mhm.
And so it's less about a consistent pattern of size of business and more about a consistency in the kinds of people who lead these organizations.
That's an interesting way to think about that. One of the other things I know is really important to you, and I love the way I've heard you put it, which is you are really passionate about businesses using intentionality and discernment in strategies and in decision making. I really like the way that you phrase that. I know that you advocate for baking in that good decision making.
Absolutely.
Can you tell us more about what that looks like? Because one of the common themes here on this podcast that is personally very important to me is this balance between short term needs and long term vision. Because
Mhm.
I tend to find a lot of companies really over rotate on the short termism and then they end up setting themselves off a cliff because nobody was looking at the North Star. With that setup, tell us more about how a company can go about baking in good decision making.
It's not Joyce's viewpoint. It's Joyce's viewpoint anchored in what other people say. So, all businesses, 80% of their growth is going to be generated from their core business. But that 20% is where the fun or the mud is going to be generated. And I speak of being intentional, discerning, because whether or not a risk turns out to be an opportunity rides on those two words. Okay. So, plotters, you need plotters for the 80%. Keep the machinery running, the marketing going, right? For that 80%. That's your get by basic stuff. But the hockey stick comes from the 20%, and you need their expertise in being discerning and intentional. So, when I talk about baking good into your strategy and to your passion around balance, you are going to have to find a way of leveraging that 20% to be that ballast between short term and long term. Many people have shied away from calling out volatility risk.
Mhm.
You want that 20% to shore up the direction and not add volatility to your ballast 80%. This is where, if the human beings make a world of difference, the human beings with the vision, that'd be the CEO, a board that understands this kind of approach to strategy, where is the 20% innovation going to come from? What are things that the board is seeing that may help the business strategy be less risky on that 20%, right? You have to match company policy with the numbers you put on the board, being the balance sheet and the income statement. What we found today is that a number of companies made statements after the events of June 2020 about their commitment to diversity, to economic gaps. Those words are not necessarily reflected in their income statement and balance sheet. You have to match and be intentional about matching, right? For the rest of 2020 and certainly throughout 2021, the work needed to be done so that 20% contributed to shoring up the 80% of the business.
There's a lot in there. I have a couple of questions. Is that what you mean when you say that policy really needs to align with financial statements? Do you think that's an example?
Precisely.
Okay. Okay.
Policy around marketing the company, policy around product development, policy around benefits. For all of these are tangible policies that define the company and its operations. One needs to look at how is that reflected by the accounting guys and gals, right? What are they tracking? Because without that direct coupling, you have marketing saying one thing, communication saying another thing, and then reports to the market and estimates for performance in the short term saying a completely different thing. And that's where companies get into trouble in terms of what message are they sending to the various shareholders, be they formal paper holders, so the investor community, be they investors inside their operating sphere, be they employees. We are fast approaching where everyone is a shareholder in the company. It's just whether or not they formally have a piece of paper that say that they own a piece of it, or whether or not they choose not to purchase your product.
So, where do you think goals and incentives come into play Because it seems to me that one of the challenges in a lot of companies is that there is a say do gap, right? Maybe we have an aspirational goal or something that we genuinely hope we can achieve. But at the same time, we haven't gone through the operational mechanics, which I would call
Mhm.
the goals and incentives. Do you see that too, given your expertise in kind of financials and your deep operational expertise?
I ask more questions now.
Mm,
Companies will always say that the package for executives includes workforce diversity. Before 2020, it was always there. But if you make that an inconsequential percentage in the compensation package, then it's a tick the box as opposed to, is this executive affording us the foresight of risk management in our employee composition?
right.
And if it's not consequential and they're not affording that dimension to risk management, I think another discussion needs to be had.
Right.
I'm hearing, I follow these things because of my interest in transformation and growth not being lip service. There's a lot of innovation going on in compensation. For example, you're having parts of the bonuses being put into, and the word is going to slip me, into escrow.
Mhm,
Here we go.
mhm.
Into escrow because that kind of change is not a 1 year change. It's a change in processes. And so you put part of it's consequential. And so you put part of the bonus into escrow for the 5 year period or 3 year period, whatever it may be defined as, for this meaningful change to happen. So innovation is not only in terms of products, physical or financial. There is room for innovation and compensation, especially at this time.
I love that. That is super interesting. If you think of the psychological benefits and behavioral economics, that would seemingly make a lot more sense than some of the other penalty oriented ways that we cure bad behavior, right? I just saw the Qantas CEO, they're clawing back a fair amount of his compensation. That's big news, right? You mentioned the 80-20 split in terms of resources and investment. And this is a good bridge into kind of transformation. What can we do to get more out of that 20%? The kind of ideas for the future, building where the company can really go.
That 20% is the difference maker
Mhm.
between which companies are going to be sold for a premium
Mm,
and which companies are going to fall flat in our lifetime. Both executives and board directors sign up to support the company. What is in that 20%? I have to go back to intentionality and discerning. I think that looking for people with those characteristics to run that 20% is critical. I think that we have a habit in position descriptions. We've seen the college requirement ebb into the background
yeah. Right.
as we look for humans who are comfortable with growing in complex environments, having the experience of going beyond what was handed to them. If you look at a set of people that have been handed a future, I dare say complexity is not their comfort zone.
Right.
The status quo is you want to be like your dad and belong to the same country club, wear all the branded stuff that you saw him go to work with. The Brooks Brothers suit. Love Brooks Brothers. Nobody come at me for that. But you understand what I'm saying.
Yeah.
And so one has to question when you are acknowledging that this 20% is the do or die part when you see homogeneous teams.
I love that. I think that's super interesting. And that's actually a great segue because one of the topics that I wanted to discuss with you is I know you're a big advocate for P&L restructuring.
Mhm.
Why do you think this is the cornerstone for a transformative corporate strategy for everyone?
When I speak of P&L restructuring, I really am trying to encourage folks to look at investments into redesigning processes as an asset. It will look like an expense because it's cash out the door. Okay. Cash out the door to buy contactless hand water dispensers for the bathrooms that recognizes all shades that humans could possibly come wash their hands in.
That hits home.
That's an investment. You may share this experience with me. Those that have P&L responsibility are not necessarily those that have the 20%. If the responses to our RFP for AI, when we ask what kind of data that the AI was trained on must be of people of diverse backgrounds, and you get no responses, then the procurement person goes to the exec and says, "We got nothing." That executive that will say, "Our diverse workforce can provide that data to prospective respondees to that RFP," switch it around from being an RFP to a partnership to better
Mm.
somebody's AI.
So you're really advocating for more creative thinking in there too. It's so hard for established organizations. And I'm laughing as you're saying the P&L comment. I've been in that situation. It's super hard because the traditional, the 80% engine is the knowledge base that I think is more familiar to most, if not everyone. And so there's just a ton of resistance in some of these organizations. One follow up question I'm curious about: how are you thinking about restructuring when it comes to something like supply chain? Because that is an area of expertise for you. Those are physical pieces to a puzzle that have to get sorted.
For so long, supply chains were designed to be part of the race to the lowest cost. That short term game has been going on for decades. With that race to the lowest price, we did not account for, we didn't put in the specs. What are you doing with your wastewater management? What are you doing when you've stamped out all the pieces that we need and there is waste from the manufacturing process? What kind of hours are the employees making the pieces that we're buying from you keeping, right? We didn't commission studies about any of that while acknowledging the millions of people around the world that died when COVID was the defining pandemic. We can do better. And so P&L restructuring and supply chain means look at your supply chain for carbon footprint, for equity of employee treatment, for waste. Ask the question and include that in your business decision. If you look at your supply chain, especially if you had glitches during the pandemic, bet you dollars to donuts that you'll start shortening your supply chain and your messaging around your product is less about we have the cheapest and the best to we have the most affordable while also reducing our carbon footprint. Employees being along the supply chain being treated fairly. And we can all define what that is specifically for the supply chain. But there are organizations out there that can help you. It takes that top level executives and boards saying our supply chain no this our supply chains of the past no longer serve us. Move to a supply chain that delivers affordability while not making the next generation's life harder.
It meets the moment. This is a really good segue to this question of what is the economic value of diverse perspectives, both for operations and for board service. And you're a perfect person to give us your insights given your experience.
The effective value of diverse boards and diverse executive teams is that you hear the oops before Wall Street or any other marketplace that's attributing value to your company hears about it. We started with questioning the assumptions, right? The assumption has always been that every group out there known to the marketplace wants aspires to whatever one single group has defined as best, as excellence, right? But it's a darn side better than when I was in school. And no, I won't say that I walked uphill both ways and all that kind of stuff. In a snowstorm, absolutely. The prevalence of the internet means that it is easy to find places where my goals as a woman, as an African American, as a person that speaks several languages, as a person with Native American heritage, I can find what validates me. And what becomes critical in this all on, all information, full on competition, companies redefining industries, is that you bring those market viewpoints to bear within a trusted space. Where does that show up? If you are at a stage where you are looking, you're a target and you want to be a target in M&A, your valuation, because you've had less oops in the marketplace, you've addressed the oops. You've done the hard work of policy matching, not looking at intangibles. Yeah, it goes up and down every year. You're talking to somebody that knows how that number is created, right? The bogey so that the income statement and the balance sheet match up. We've a diverse, trusted group. You'll start seeing some consistency in that intangible asset line because the oops are quickly seen as an opportunity or quickly seen as a risk. Your brand risk is in the hands of people who have signed up and are paid to care about it. When I was on the board of Sunrise Banks, we were growing by forming partnerships with fintechs. It also happens to be a Minneapolis headquartered bank with retail. Minneapolis rings a bell because of the murder of George Floyd. And I can say murder because people were convicted for that act. And I'm in this board meeting and I hear about training for tellers. And I have to ask, how are they trained to describe possible robbers?
And what's the answer to that?
Have you ever been to 7-Eleven?
Yes, I've had a Slurpee in my life.
A 7-Eleven, the next time you go there, look at the door when you're walking in and out. There is tape with height.
Oh, wow.
And I asked the question and I remained engaged because I was told part of the training is to look at the door as the assailant, prospective assailant, goes through the door and catch a quick around 6 feet, curly hair, just not their cultural
Mhm.
heritage. And so that's the sort of thing that me being in the boardroom, it goes in the minutes and we can capture that organization didn't wait for an unfortunate incident.
Right.
It understood that whoever they were going to bring in for training needed to give tellers tools that would not put the brand at risk. It's a very small practical. I don't assume when I'm in the boardroom, when I'm an executive, that this has been thought about beforehand. When the crisis happens, when the unfortunate incident happens, these are the talking points. And I much prefer to ask the question in a trusted space so that the brand doesn't take a ding and we can keep on doing exciting stuff for growth.
Absolutely. It's better for the brand. It's better for their employees. It's better for their customers. This is a very powerful example of bringing a diverse perspective You have extensive board service. You serve on both public and private company boards. You're one of the 50 women to watch as part of 50-50 women on boards. You're asking the questions that maybe no one's asked.
One has to appreciate that as a board director, you don't have P&L responsibility. You have governance accountability by law. That's why they say you have
Yep,
fiduciary
yep, yep.
response. Your questions provides is recorded formally. It is documentation that supports the valuation of that company. When you are intentional about diversity of gender, diversity of cultural background, and making that normal, you actually are baking in exactly what you're there for, a company that lasts into perpetuity with as few dings as possible.
Diversity helps combat that inside view problem that you're alluding to. Your board service includes Land of Lakes and private companies like Sistema.bio. Are there examples or stories across those of what it means to really contribute to oversight? We'll get into M&A too before we lose you.
There are other board directors that feel similarly and go about their roles similarly. You are bringing governance as an asset.
Mm.
For example, I have always served on the audit committee in any board that I've been on, for profit, nonprofit, private, etc. Why? Because where the money goes is where it's really going to happen.
I bet that you ask really good questions too. I have a sneaking
Well,
suspicion.
I hope that my questions contribute to enterprise risk management. So
It's
you'll have,
important. It's important to ask those questions.
I,
Absolutely.
because my executive roles gave me line of sight across organizations, and I worked with the marketing team, the R&D team, the CFO, right? I tend to try and ask questions about how does the hip bone connect to the neck bone? And is it because it might be it is connected, but through a few other muscles and the blood flow is goes throughout the system. Just see, but enterprise risk management, and I take very seriously that these questions around supply chain, carbon footprint, suppliers, and their performance and rankings in terms of employee safety and rejects, product rejects, right? I take that very seriously. And in the case of Sistema Bio, I joined as the chair and established a finance and audit committee as well as a human resources committee and drafted the charters because it's a Series B company. They hadn't had that yet,
Yeah,
but
I'm sure.
part of my interview process was my appetite for bringing that to bear. And they were excited to go on that journey. And it's really served the company as we have gone through record year of revenues and now looking towards Series C. And I am confident because we've done the hard work.
You don't often hear that for private company boards. I think there could be a lot of variance there, especially when they're early stage. So it's great that they are bringing that big picture perspective. I think it's super important. I would love to just get into M&A too, because that's a topic we're both very interested in. And I don't think we talk very much around here about how important board oversight and board contributions can be to really successful M&A strategy. I know this is something that's really important to you. What's your take on that? Are there watch outs or anything else that you think the board should keep in mind when looking at an M&A strategy?
So thank you so much. What is an aspect that is often overlooked is, especially if you are on the acquiring mission, is that will targets want to be acquired by you? So many times in relationships, the assumption is that we've got the money, we've got the broader market, will and the discounting of whether or not who you're approaching may want to be acquired by you leads to an acquisition may happen. I'm not here foretelling that If they don't want to be acquired, they can just stonewall and not be acquired. That's foolhardy.
Mhm.
But it can make the process a little bit longer, can make the process more delicate. It may turn an acquisition on its head. So you become the target, turn things around kind of thing, because they see gaps created by your misalignment, be it supply chain, be it how you treat your own employees, your approaches to technology. Are you going about technology, embedding technology in your operations from a fear of missing out approach? Or were you thoughtful and intentional on focusing on worker safety, product quality, and supply chain? Right. And so I'm just encouraging that as a board member, do the hard work so that when you do reach that point of wanting to acquire, or that's your exit strategy, right? To be acquired, that you've got all the ducks lined up, literally, and can tell a story backed up by what you already are, as opposed to slapping on yellow paint on the van and calling it a bus. So, really, it's one of the things that I've seen where maybe more money was offered for a particular target, and the company where I sat on the board was chosen because we were the real deal.
Mm. The business really mattered. The fundamentals really mattered at the end of the day. Yeah.
Yes.
A related question about this that I find so interesting too is obviously the failure rate associated with acquisitions is very high in terms of things falling apart during the integration process or post, or simply value not being realized. So, is there anything else that you think boards can do to better help ensure the success of M&A on the strategic side?
I think what you're talking of is the human element. Integration processes has a lot to do with expectations.
Mhm.
And if you are out there shopping, then as a board member, ensure that those leading that dimension to your growth are clear on what the expectations are. Are we going to have two CMOs? No. As a board member, I don't have the questions, but I sure have a responsibility to ask them and communicate it in a way that the team working on the acquisition project knows that our brand depends on transparency and forthrightness. And if it means building in placement, not necessarily at the point of acquisition, maybe you sign some contracts for folks to stay on so that knowledge is truly transferred, then add that in the budget as opposed to sending off one or the other CMO spiraling and having to find false words to describe their experience in the merger, right?
This is great. AI and machine learning have obviously been really hot topics the last few years. And the experts out there will say they've been important for decades now. What's your perspective on AI?
My perspective on AI, the market might have gotten ahead of me last week. Was it last week or 2 weeks ago?
Time is relative now, Joyce.
I don't want to say I knew it was coming, but we really need to shift from this fear of missing out approach to focusing on three key areas to any company when it comes to generative AI and data. The three areas are worker safety, productivity, and product quality. And taking focusing on those and putting out vendor requests, procurement becomes key that it be trained on data that is diverse. And if it hasn't, then find a way to partner with your preferred vendor to build that in. Because without a focus, an explicit focus on that, I would be sad to see erosion of investments, of embracing all the upside of a diverse workforce culture. And then we're worse than back to square one. We've now embedded the
Mhm.
past into the future and all the negatives that come with those assumptions.
Yeah, it's a very salient point. You're right. We could lock into a world that doesn't take advantage of all that we have to offer. I don't think we talk enough about how diversity is also about growing the pie. It's not just
Oh,
taking a slice off the table, right? That seems to me like part of the secret unlock to the conversation we're having here. But
absolutely.
yeah,
And thank you for bringing that conversation. Too often, growth is looked at from the perspective of there's a finite amount. So I have to cannibalize my neighbor in order to achieve my business goals. And I'm a great believer in blue ocean strategy, and we won't that's a tag that I think everybody should take a look at because that truly gives you tools to take this perspective that what we're looking at is growing the pie while managing risk. I think that not taking advantage and rolling back company cultures to where we don't have all the festivals of all the lights on our calendars so that we don't, "Oh, they're off again." It's an opportunity for you to join, to give a greeting to a colleague, right? Means that we're focused on more in the past than the opportunity in the future, and I've never lived that way, and I think more people seek to live in a future that offers something of substance and shares the power in ways that we haven't been able to achieve before, but we know is needed.
very much so. It's an exciting time, even though it's fraught in some ways. It is also a really exciting time, I think.
Yes, they call it rose colored glasses, glass half full. I come from a perspective of taking ownership for what I can change, putting aside those that don't believe that a, a bigger pie is possible. When you look at my career, it one of the constants is that it's been in areas where I shared space with folks that thought more wasn't about less for somebody else.
I love that. Really love that philosophy. I knew that we would run long because there were so many things that I wanted to talk to you about. As we get closer to the end of our time, is there anything else that you wanted to share?
I just want to encourage prospective board members, prospective executives. Rainmaking on 80% is definitely something that is needed. I am speaking to those that are bringing the 20% and concerned that the 20% be additive to
Mm,
the 80% as opposed to just a little walk in the park. Let's try this. Oh, ho hum. Profiles such as mine bring richness to that 20% in ways that everyone, the 80 percenters and the 20 percenters, will be proud of and happy to have been part of. That's been my experience. Own all that you are and bring all that you are to the rooms, to the trusted rooms that you're in as a board director slash executive.
what a great way to bring us full circle on the importance of that philosophy. Joyce, just our last question, which I always like to ask, what do you think that high performance companies do differently from average performers?
They take that saying of respecting what you inspect to tangibles and intangibles.
Mm,
And high performers begin meetings with check ins, open check ins, and then they can grind on the numbers because the room then has a read on where everybody is as they grind on the numbers. So I myself find that is a distinguishing factor to high performance teams, high performance companies, and to having that level of I help to make it better. Communities where we operate, and that's just a very high reward that goes beyond compensation.
I think that's great. What a wonderful place to leave this conversation. Thank you so much, Joyce, for joining us. We've really appreciated having you.
Thank you so much, Neeta. I thought I'd enjoy it, and sure enough, I did.
I'm so glad. I'm glad to hear that. Thanks so much for listening to Good Revenue. If you liked what you heard, please subscribe to the show, give us a rating, or leave us a review. It helps other listeners find us, and we really appreciate your support. You can also catch full videos and highlights on our YouTube channel.